Well, a surging gold price has encouraged everyday Australians to queue up and buy gold bullion. Here's some footage of the queues outside ABC Bullion in Sydney last week. Now, clearly, there's a huge demand for gold, but there are other ways of investing in gold. You don't necessarily need to buy a gold bar. You can invest in gold-producing companies or exchange-traded funds. Here's a look at the gold price today. You can see the spot price of gold's currently about $4,100 an ounce, down a bit, down slightly. So for more on this, I'm joined by Justin Lin, investment analyst at GlobalX. Justin, good to see you. First up, why do you think Aussies are queuing up around the corner to buy gold bars?
Well, yeah, it's actually quite interesting, but also it makes a lot of sense from our perspective, right? If you're looking around the world, geopolitically, economically, everything's a bit shaky. Tariff-driven fears between US and China. The US government having its longest funding shutdown perhaps forever. So all of these things are pointing to a bifurcation of the global financial system, volatility in terms of equities and fixed income. When nothing is safe, you go to safe haven assets, and gold is one of the premier safe haven assets.
Yeah, and just talk to us about the phenomenal run gold's been on over the past sort of 12 months or so.
Yeah, absolutely. It's been a long run coming, and from our perspective, it's being driven by two major new players and then some traditional factors, right? So since 2022, after Russia invaded Europe and Russia invaded Ukraine, we saw that US seized roughly $300 billion of their assets. And this really alerted central banks around the world of the dangers of being on a majority US denominated financial system. And given that, you have central banks like China accumulating gold massively over the past 3-4 years. So since 2022, based on World Gold Council data, we've seen that central banks have essentially doubled their purchasing of gold from 500 tons per year to over 1,000 tons per year. So that is a massive new player in terms of the gold market. And then secondly, Asian ETF investors, so Chinese ETF investors, have really stepped in. This really wasn't a thing in China, investing in gold via ETFs. But over the past 2-3 years, as you can imagine, the Chinese investment catalog has been quite limited. So when you can't invest in property, you can't invest in equity, once again, you head towards gold, which is that safe haven asset, which has done very, very well. So those are the two new entrants to the market. But then you have traditional drivers like interest rates. So when interest rates go down, gold prices tend to go up because gold is a non-yielding asset. And in finance, there's this concept called opportunity cost, which is basically what you can get for free. And interest rates are one of those things. So if interest rates are going down, it makes gold more attractive to investors overall.
All right, and then this week it seems like gold definitely hit a bit of a speed bump in the price. It plunged quite dramatically a few days ago. Do you think investors see gold now as a bit overvalued, or is there still a lot of upside to gold and the gold sector in general?
Yeah, definitely. It's a good question. When you see a road bump like this, like a big one-day percentage sell-off, I think the immediate reaction can be fear. But from our perspective as analysts, you look at it from a technical standpoint or a structural standpoint. And from a technical standpoint, I think most market participants and analysts alike were of one mind, thinking that the rally over the past 2 weeks has been a little bit hot, a little bit frothy. Stable, safe haven asset like gold rallying 20% in just about a month is not something that is sustainable over the long run. So there was almost a breath of relief for us to see it be sold down a little bit. In terms of why it was sold down, there was no real smoking gun. From our perspective, I think retail investors dived in a little bit too quick, and they are taking profits now and just playing it a bit safe. But from our perspective, this ability for gold to stay supported at 4,000 and really bounce back up to 4,100 and more today shows that the structural narrative is well in place. And that structural narrative is what we talked about, this geopolitical volatility, economic volatility. Everything is still at risk heading into 2026. There's a lot of clearing events heading towards us, US-China meeting between President Xi and President Trump, as well as CPI data from the US, which could guide interest rates.
And really quickly, it's not just gold. Silver has been performing very well too, hasn't it?
Definitely. So silver has been one of the beneficiaries this year, major beneficiaries. We run actually the only physical silver ETF in Australia under the ticker code ETPMAG, and it has seen record flows this year. More than $340 million flowing into that fund, which is almost quintupled the previous record in 2020, which is a pandemic year. And I think that is much to do with its relationship to gold. So gold and silver do have that relationship known as the gold-silver ratio. And silver has been for a long time waiting to catch up. And so this year, with silver doing so well, I think investors are really taking note.
Justin Lin, thanks for coming on the show.
Thank you.